you can make stipulations for how you want the trust to run. You can stipulate that everyone must move out and it must be used for rentals.
Okay.
It must be leased, and then the money, you can decide how the money should be used. All this is easy in your lifetime as a founder because you have control of the process. But now, especially when you're now gone, the trustees have then the duty to make sure that those obligations or those objectives are met. They must do everything that they're doing in line with what the founder would have said. So that's one aspect of what the trustees are supposed to do. And then they also have an obligation to make sure that the compliance of the trust is in order. If the trust gets into a business or into an industry that requires licensing, you must make sure that the licensing is in order. Just because now you're owning shares or you're doing something under a trust doesn't remove compliance obligations. And that also applies to tax obligations, because the trustees are supposed to make sure that the financial records of the trust are maintained and that they're accurate.
Hello, viewers. Welcome back again to your corner. It is the Entrepreneur's Corner brought by MoneyMart Finance. I remember in the last episode, we were talking all things tax and ZIMRA issues. And we welcome back again Shami and said, Shami, we did not exhaust our questions. We want to hear more. We want to make sure that we understand these issues. Entrepreneurs, it is good to be here. But before we get into it, let us make sure that we like these sessions. We comment. We really love your comments because we are in this corner together as entrepreneurs. We want to demystify certain issues that are just hearsays in the market. And also at the same time, when we gather here, we encourage each other. We give each other hope for the next day. And you are not out before you are really out. So this is the reason why we gather again here. Please do not forget to make sure that you subscribe and click that reminder button so that every Wednesday you are reminded that we are getting back again and be sitting in our corner as entrepreneurs and discussing issues that matter to us, even to our businesses. Remember, we are the ones that are making Zimbabwe thrive and making sure that it is surviving the following morning because of its entrepreneurs, homegrown Zimbabweans that are making things work. Shami, welcome back again to the Entrepreneur's Corner.
Thank you very much. And I'm glad that we are doing a second installment because we have a lot to talk about.
A lot. Yeah. And even the questions that then came after the previous episode. Let me start there. Shami, our viewers are asking to say, but yes, you guys, you said, I can declare myself my own things. Maybe I might not even need that other people who always say, come and I'll do things for you because I haven't done a due diligence on them. Their questions are, when we get there to that ZIMRA counter and declare our goods, sometimes we are told that these goods are exempt and all of a sudden they seize those goods. But we are not in the know which goods are exempt, which can be imported in Zimbabwe, which ones can be manufactured in Zimbabwe, which are not allowed to be taken in. Where do we really get this information as entrepreneurs so that we do things right? Our desire, especially from this corner, is to do things right and build sustainable businesses that turn into corporates.
Yeah, absolutely. And we don't want that defense of ignorance, right? And say we didn't know. So information is the key thing that we need in the way that we're running our businesses. So I think ZIMRA has done a better job of providing information on their website. So if you're a person who is involved in any kind of business that involves bringing goods into Zimbabwe, I would say you need to stay on that website. You always need to be checking. I'm not sure what kind of information you can get on the social media platforms, but I know for sure on the website, you're able to get all the information that you need. So that information will include statutory instruments that publish the goods that are no longer allowed for import into Zimbabwe so that you're not caught at the border with items that are not allowed for import in Zimbabwe, and then they're seized. So by the time you're going, you already know what it is that isn't allowed into the country. It will show you the goods that are exempted from paying duty when you're importing them into the country. So it's important to be able to go through those statutory instruments, because they'll give you a list. It's very simple. You will see it. Just list them. That this here is not allowed for import into the country, so that by the time you get to the border, you already know what it is. It's a different story if you insist on bringing the goods into the country, but
Exactly.
But you will be able to get that information.
And I can imagine the loss of capital because of just that kind of ignorance. But I also liked what you said, to say there are even other goods that are duty exempt.
Yes.
And you might not be even in the know that this thing that I'm importing is exempted from duty.
Yeah.
And you have already calculated saying, I'm going to pay duty and the like. And maybe somehow you then get to that counter, and that particular officer that you're dealing with may not even know that this thing is not duty exempt. But it is for you to have that knowledge, because you then do yourself good, say, no, you are calculating for me duty. The thing that I've imported is exempted from duty.
No, absolutely. Because when you're then having conversations with ZIMRA in any realm of tax, you need to know what it is that you are doing. Because think about it this way: it's like when it's like doing a property transfer and you're told that your capital gains tax is 20%. If you don't know how it's calculated, that it could actually be classified as 5%, you're just going to go by what they say. So when you get to that place, when you get to the border, you need to know that how it's calculated and what it is that's actually applicable. Because otherwise, then they want to collect to the fiscus, so they've
got a KPI.
100%. So they're going to make you pay the duty, even if it's not exempted, or they may not even know, like you said. So you also have to know, so that you can push back, but from a place of information.
I always feel home, especially sitting in this corner, fellow entrepreneurs, because the knowledge that we are getting and being given, we can never really make losses, those huge losses. I always say, where you can avoid a loss, you better avoid it, because you have that extra knowledge for you to avoid a loss, because we want these businesses to grow. But Shami, when we ended the last episode, this was just a wrap up for the questions that came from our entrepreneurs saying, you know what, we don't even know. Our goods are being seized and thrown away, and they're believing us they are putting them on fire. Sometimes we don't believe it. It's one story or the other. Yeah. But it is what it is. If it's exempt, you cannot bring it in. But look, we were sitting at a position as entrepreneurs. Being a Zimbabwean, we are looking for things that work for us. And that gives us that extra dollar, at the end of the day. So as entrepreneurs, we have been told and we have been advised in hearsay streets. These are just our streets that we walk up and down in, and we don't have time to really sit down with experts like you to advise us what really it is. We've been told that we can manage our taxes through trust. I open a trust, I open my company, I make my trust to be the owner of that company, and this trust is not taxed. The belief system in Zimbabwe has always been, if I run my business under a trust, I'm tax exempt. I will not have to pay taxes. But there are, issues that then came out in the previous days, where ZIMRA has now been announcing almost a different story that our ears were hearing over the past years. So due to that recent public notice reminding trusts of their tax compliance obligation, what has become such an important issue for ZIMRA to follow trusts, which we were believing they are tax exempt, at least from the knowledge from our street corners as entrepreneurs?
Yeah, that's a That's a loaded one because we're dealing with this a lot in terms of I want to register a trust, and there's no objective sometimes as well to the registration of the trust. So I think I want to start from I will answer your question, Doc, but I just want to start from explaining what a trust is.
Yes.
Let's be clear about what that structure is, right? So a trust is an arrangement that you make, right? And it's made up of people that are called trustees. Trustees are the people that are then responsible. If you put together, they become the trust. So the trust is not a thing by itself. The trustees are what make it a legal arrangement. So the trustees are responsible for administration of whatever assets that you put into the trust.
Okay.
So you've got trustees and then you've got beneficiaries, the people that are supposed to benefit from the activities of the trust. So the person who founds the trust or who starts the trust can also be a beneficiary. So in your own lifetime, you can put property into a trust and also be a beneficiary of the trust.
Okay.
Traditionally, people have been using trusts for estate planning purposes. Just to protect your property and to make sure that you've got some maybe generational wealth that gets going, because you can put property into a trust and stipulate that it must never be sold. So you can then, that's how you can have then a family home that can last 100 years, because there's a trust that started and said this must never be sold. So my family must always live here and that sort of thing. So ordinarily traditionally we've been using the trusts for that. What then happens is that because a trust can operate and own property, it can own shares in companies. That's where this aspect then comes in of, I can use a trust to manage taxes.
Yeah. That's what they say, to manage taxes.
Right. So because trusts are private, it's a private document. It's not publicly available. So there's a lot that you can do without anybody knowing. And that's the thing that ZIMRA is trying to cure. In terms of trusts are involved in income generating activities without anybody knowing. So when ZIMRA says we want to remind trusts of their compliance obligations, again, they're not bringing in anything new. The obligation has always been there. So when that notice came and they've got a definition of a trust, they didn't go to the Act and start adding a definition of a trust and saying it's this, that, and the other. It's always been there. We just have not been compliant. So ZIMRA is just, I suppose, looking at loopholes in some of these areas that they've not been particularly serious about collecting in, and saying, oh, so now let's go after these trusts. Let's go after this this type of structure. So that's sort of what happened there. But it's not a new thing that came up in other countries as well. Trusts are supposed to pay their taxes. So let me just be clear and say that it is not a method of avoiding paying your taxes.
Okay.
Yeah.
Yeah, because for us as Zimbabweans, I think the notion has always been that trust is automatically exempt from taxes.
No one has been paying. So if I register my trust and I tell you, but I don't even pay taxes, and then you think, oh, so let me also register a trust, because that's what it is. It's just we told each other that trust don't pay money, don't pay tax. So we all started registering trust, thinking that that's the position.
Here, viewers, you are hearing it for yourself here, and we were always thinking, especially we thought it's professionally speaking to say, if I register a trust, it's managing tax. But it was actually a method of running away from our obligations as entrepreneurs, as business people. And what I've heard from what you're explaining is that these things have always been there. Maybe ZIMRA was not really following up or implementing what it is at the end of the day. But now, when they made an announcement, it then sounded as if it's totally something new. Let us take a break, viewers, from now, as we continue with Shami, as she explains a whole lot about these issues of trust And yes, like she said, we were always thinking that it's an issue of estate management and the like, but it can go on even to hold shares, and a trust then can make revenue at the end of the day. Because I believe when it's given dividends or something, it's something that we are going to discuss, right?
Absolutely.
So we are going to hear deeper and to hear more of how these things do happen and how we should be alert as entrepreneurs in these issues that are now being publicly announced by ZIMRA, and letting you know so that you are always a compliant citizen, a citizen who makes sure that their obligations are always in place, so that whatever opportunity that comes your way, you're not going to lose it because of that small little thing of lack of knowledge. We are bringing the knowledge right to you. We'll meet after the break.
What if your home you've been dreaming about is closer than you think? You don't need thousands and thousands of US dollars for you to build your dream home. All you need is the right financial partner for you to get started. We at MoneyMart Finance, we have the micro housing loans designed for people just like you. Whether you are laying your first brick, adding a room, or finally finishing your dream home, MoneyMart Finance is here for you every step of the way. With flexible amounts, affordable repayment terms, and quick approvals. Your dream home is no longer just a dream. Build your future, build your legacy, build your home with MoneyMart Finance.
MoneyMart Finance, creating wealth, changing lives through digital means.
Welcome back again from the break. And we are saying, please do not forget to like, to comment, to subscribe, and to click that reminder button so that every Wednesday you are in your place and gather around together with many entrepreneurs so that we get the knowledge that we need to make our businesses sustainable. It is the Entrepreneurs Corner, brought to you by MoneyMart Finance, because they care for the entrepreneurs and they want you to be able to grow those businesses. Shami, we are talking about trust here. And like I told you, as Zimbabweans, we just thought issues of having a trust would have really run away from tax issues. But tell me about it. What are the tax obligations that trusts generally have? Since you said these are private entities and they're not really public, so what are those obligations do they have, and what records should trustees be maintaining? If I then subscribe to a certain trust where I've been appointed a trustee, what should I get to know about and advise even the founding trustee who has opened the trust to say, as long as I'm a trustee, I have an obligation and a duty to make sure that I comply with ABCD, especially in terms of tax issues.
Right. So when you're thinking of your trust in terms of tax obligations, think about it in a similar manner to a company. Right. So there are just a few things that are a little bit different, but think about it like a company in terms of the taxes that are applicable. And I'll start with the big one, which is income tax. So tax that is levied on money that is made, right, by the trust. So the thing that's different about a trust when it comes to income tax is that it only applies to income that is not distributed to beneficiaries. So if money comes in, so for example, keep it simple. If your trust has a property and there are rentals that are coming in, and the trust says that that rental money must be used for school fees for the beneficiaries or whatever stipulations that you've made, that money is not taxed because it's being used as soon as it comes. So as long as it's distributed to beneficiaries, as long as it's used, it is not taxed. The tax is applied on income that comes and sits in the trust.
Okay.
So if you're just building a nest egg, for example, and that rent money is coming in and is just sitting in the trust and is not being given to the beneficiaries, that's what you declare.
But
and that's
school
what
me,
is
Shami.
taxed.
Okay, but school me. let's say rental incomes are coming on a quarterly basis, right? And distribution, I want to do it half yearly to the beneficiaries. So are you saying as long as I'm keeping it maybe for another quarter or for the other half year, that income should be taxed until such a time when it is distributed?
100%, because with ZIMRA, you make your declarations quarterly, right? You do your QPDs. So if you get through the quarter and the money is in the trust, the income is in the trust, then you do have to declare it for income tax purposes. So only when it's distributed, when it's in the hands of the beneficiaries, is it then exempt. It doesn't, income tax does not apply. Because think about a beneficiary who's a child, for example. You could not possibly tax that child on income or on money that they're getting from the trust. Simply because it's generated by the trust. So as long as the money is not distributed, it is declared for income tax purposes, and the rate is 25%, just like with the company.
Okay, also it applies the same rate.
It's 25%. So when we then say, oh, I want my shares to be owned by a trust, and the tax rate is the same.
Oh.
Yeah. So you may not necessarily be running away from anything, I think, but you then might need to then get an accountant and a lawyer to work together in terms of structuring it to see what tax management you can do. But the tax rate is the same.
Okay.
For trust and companies.
So what I'm hearing is that, let's say the trust owns so many properties, and we then structure it in such a manner that this rental income should come every year beginning of January. So as soon as it comes, then it goes out to pay the fees for the kids. That very January that it has come in, then it's tax exempt because it has been immediately distributed at the time of coming in.
Right. That's what that means. It's not always practical, though.
Yes, it is. It is not. That's why what I'm trying to organize in my hand.
To get the money and immediately then distribute it and make sure that it goes to the beneficiaries, particularly if maybe you're raising money to purchase another property or do something else with it. So you might want that income to build for a bit, for a couple of years before you're able to make that purchase. But that is the principle.
Okay. Yeah. So as long as we are keeping it for something else and we are building it up, it means in that particular year, as we are building up, we need to be able to pay our taxes.
We need to pay income tax.
Income tax on that trust.
On that money, yes.
We are learning. Yeah. We are learning. Yeah. But
so you're looking at that income tax, and then if you've got employees, payee applies, pay as you earn. That's why I said think about it like a company. Because in the ordinary course of what you're doing in your company, your employees pay you have to pay payee, right? So if you've got employees that work for the trust, you have to register them for pay as you earn. VAT will also apply if you meet the threshold of 25,000, which is what we discussed in the previous episode, and then capital gains tax will apply as long as you dispose of an asset.
Oh, dear entrepreneurs, we really want to understand because we might not get Shami. This time is charged on your clock. So let me really try to represent you here. So Shami, correct me what I'm hearing and everything. So we are saying here, if the trust holds maybe 10 properties, right? And say from each property, we are receiving rentals of 3,000 US, maybe per annum from each property. It means out of the 10, would have received 30,000 US per annum. Right. What are you saying?
You pay 25%.
Oh,
you pay 25%.
And we then also have to register for VAT.
That's income, yeah. So that's what then happens, because now you're above the
25,000.
you're above the threshold. Yes.
So now we need to register for VAT because look, 10 properties bringing 3,000 per annum each. That's 30,000 per annum.
But remember, VAT is not for you. So if you're registered for VAT, it means your tenant must pay rent plus VAT.
Oh, okay. I think that's the clarity.
When you're getting is when.
So when we
now-
invoice our
Yes,
tenants,
yeah, as long as you're VAT registered for whatever purposes, whatever you're invoicing for, whatever is being paid for, must always then reflect VAT. Yeah, which right now is 15.5%.
okay.
So it means it's something you then factor into whatever invoices you're issuing.
All right.
Yes.
Dear entrepreneurs, we are learning here. And it's good when we get to sit down for a moment and get the knowledge, as we are emphasizing, especially during this episode, to say this knowledge is very critical for us. But another question that I have for Shami today is that, you know, some were born in a family organized ancestors who knew about setting up of this trust long back. You know, we are coming from different spheres of life. Not everyone is coming from Gokwe like me. But look, I'm saying others are born into families that have been well organized from way before. And these family trusts have been established years ago. I can imagine, with the knowledge that I have as an entrepreneur, I can now start even planning for the fifth generation, you know. So let's say now we are in that fifth generation. You know, my husband is called Ken. So Ken's kids now are inheriting, and this family trust that has been set by Ken and Ethel, and you know, it's now years, and they haven't even filed any return or updated any records. What should trustees do if they discover that their trust is not really compliant? Yes. Should they panic?
No need to panic. Right. So it must never panic. There's never any cause for that. But remember at the beginning, we said that trustees are what make up the trust, right? So the trustees have a responsibility to maintain records. So financial statements, bank statements, all your statements of account, the trust deed itself, the document that is used to create the trust. They must make sure that all those records are in place. You've got an asset register. You keep track of everything that the trust owns. So should you then find yourself in a situation where you already have a trust, right? And now there's this issue that's coming up that says, oh, but you know, by the way, you're supposed to be paying taxes. I would say take advantage of the window that ZIMRA has provided, because the notice that started all of this commotion said that, you know, trusts must meet their obligations, and they put a deadline. I forget what the deadline was, but take advantage of that window that has been provided. If you then miss the window and you are now filing, you go back to the issue of voluntary disclosure. You're the one who must now go and voluntarily say that, look, I've got a trust and it has not been paying taxes. So you get an accountant to assist with that. But you must also note that if your trust is just has a property, for example, and it's just sitting and it's not making any money, then there's no tax obligation for you. The obligation is registration. It's to make sure that it's registered in the ZIMRA system. You've got the TIN, which is your assigned ZIMRA number, and then you file zero returns.
Okay, so you'll be filing new returns because that's
as long as there's no income that is coming in, then there's no need. So especially like with some of these family trusts, the properties are not being rented out, or if it's your actual family home that you're living in that is in a trust. So all you have to do is then file the nil return. So you don't have to. So there's no. That's why I said there's no need to panic, because I think that's a lot of trusts. To be fair, they're not generating income.
Yes.
They were made, like I said at the beginning, they were created for estate planning purposes, for succession planning. So they're not making any income. So you don't have to worry about, oh, now ZIMRA is going to be asking me for money when the trust is actually not making money to start with. If you're not making money, then that's fine. Then file the nil return. But for purposes of just making sure you always have a tax clearance, then you do that.
Yeah, but there's need if you as a trustee and, because I want to imagine that, especially for these ones that we are talking about, the family trust that were registered years back, they were exchanging hands from one year to the other. So it means that now with this announcement and this notice, you need to go and register the trust to ZIMRA and declare the new returns starting from now.
Yes, so that's the current trustee's job now.
Okay.
To make sure that they comply with that obligation. And hopefully there are records that show the movement of money and property in the trust. But family trust seems to be fairly simple in terms of, there's property, there are houses, and there's not too much movement in terms of property being sold and coming into the trust and that sort of thing. So you hope that then the records are up to date and in order, but the current trustees are the ones that then have the responsibility to comply with the tax obligations.
There you go, viewers. I know for us, for those family trusts, it has been to take care of that Glenora home. And even today, we are still gathered in that Glenora home. It's not even making income. If there's anything, we are fighting for space in that Glenora home. But let us take a break and we come back, hear more after the break.
Say hello to a smarter, faster way to get instant answers with MoneyMart Finance. Meet Libby, your 24/7 virtual assistant, ready to help you every step of the way. Need financial guidance? Looking to apply for a loan? Libby has you covered instantly. No queues, no hold music, no branch visits, just a simple WhatsApp message anytime, anywhere. It's fast, secure, and incredibly convenient. Everything you need is right in your hands. Step in the future of finance today, save our number and send a hi and let Libby take you from there. MoneyMart Finance, empowering your dreams one conversation at a time.
MoneyMart Finance, creating wealth, changing lives through digital means.
Welcome back again from the break. And, the nuggets that we are getting here, they are out of this world, dear fellow viewers. And I'm so excited about the things that we are learning, especially with these issues of trust and how we can manage everything about them so that we do not be found on the other side. And Shami, as we are continuing in our last session, I told you in the last session to say, especially for these trusts that have lived over 40 years, 50 years, trustees were changing from one phase of generation to another. And I am here now. I've just been made a trustee in that particular trust. I don't even know what it is to be a trustee. I've never been at a school where trustees are set down and taught, now that you are a trustee, this is what's expected from you. So what are the legal responsibilities of trustees, especially when it comes to tax compliance? And can trustees be personally exposed, them as individuals, if a trust fails to meet its obligation? Maybe to bring it to light and to simplify what our viewers are asking and fellow entrepreneurs are asking. They're saying, look, I'm the one that has now gone to university, and there's always have been a family trust that have been running from one generation to another. And now the old Madalas are just saying, Ethel is the one who has a degree. Let now be one of the trustees. What does it mean to me? Maybe I never did law in school and the like. I'm in my social sciences. I don't know about these things, but yes, I've been appointed as a trustee and I've accepted the duty. What should I know? And will ZIMRA come after me personally if things are not well in this trust?
Right. Okay. So we said trustees have duties, right? And they have what's called a fiduciary duty. And that means they have legal obligations that if they don't meet, they can be held personally responsible for that. So remember that.
Can be held
Yes.
personally.
Trustees have fiduciary duties, right, to the trust. So when you draft a trust deed, it will very explicitly, it will say what the trustees are responsible for. So they are in general responsible for administration of the trust. So they are in charge of the money. They are in charge of any assets of the property. And when we say they're in charge, they're not in charge in a vacuum. Their job is to execute the wishes of the founder of the trust, because it will state what the founder wanted, or what the founder wants, rather, if they're still alive, right? So you can say, and let's use a family trust as an example, that I am creating this trust for the benefit of my family, and I want continuity in terms of what happens with my family home. So you will specifically state it must never be sold. And you might state that my children can live here. You can say my children can never live here with their spouses. So there are all things that you can stipulate.
Okay,
Or
so
you can
great-grandfather can have stipulated that your wife cannot be here.
And you have no option but to move out once you're married, and that sort of thing. So you can make stipulations for how you want the trust to run. You can stipulate that everyone must move out and it must be used for rentals.
Okay.
It must be leased, and then the money, you can decide how the money should be used. All this is easy in your lifetime as a founder because you have control of the process. But now, especially when you're now gone, the trustees have then the duty to make sure that those obligations or those objectives are met. They must do everything that they're doing in line with what the founder would have said. So that's one aspect of what the trustees are supposed to do. And then they also have an obligation to make sure that the compliance of the trust is in order. If the trust gets into a business or into an industry that requires licensing, you must make sure that the licensing is in order. Just because now you're owning shares or you're doing something under a trust doesn't remove compliance obligations. And that also applies to tax obligations, because the trustees are supposed to make sure that the financial records of the trust are maintained and that they're accurate. Some trusts will even stipulate that they can have annual audits. They must, if the assets are considerable, actually just have an accountant. It will all be stipulated in the trust. So those are the duties that the trustees have. So now bringing it back to tax. We said they must maintain accurate records, and they must appoint what's called a public officer. So ZIMRA wants one of the trustees who's a public officer for purposes of ZIMRA. So the point person for ZIMRA purposes.
Should that person be
who's a
qualified
trustee.
in a certain manner to be a public officer?
No. They are, so just to address another issue that you said, we didn't go to law school, whatever. You don't need all of that to be a trustee. Trustee is just a sensible person, right? It's just a person with sense, right? It makes sense, obviously, to have certain professions in there, but, it could be your relatives, it could be your friends, like people that you trust. You can also get professionals. Some people will add their lawyers, their accountants, just to make sure that the professionals then make sure everything is then done properly. So ZIMRA wants a public officer. So that's just a person from the trustees that you select, and then that becomes the point person for that. So that's the person that will then be responsible for ensuring that the trust tax obligations are met. But if ever then there's an issue, because remember we said at the beginning that the trust itself is not an entity. The combination of trustees is what makes it a trust. That's why you can have personal exposure if it then turns out that you were not doing your duties properly. So it's not just an automatic, or it's not just an automatic thing where trustees are then just liable, but it's only situations where it turns out that they're not doing their duties properly. So they do have to just make sure that they are meeting those obligations as required by ZIMRA, particularly the public officer, because now you're the face of the trust when it comes to tax issues.
Okay.
Yes.
So what I'm hearing here is that the qualification being to be a sensible person, it means you have to be sensible, not to be ignorant. When whatever the process has been done and you are appointed a trustee, you need to be interested and ask for the trust deed and understand it, read through it,
100%.
and understand what has been stipulated, what have been the objectives, and everything about it.
Yeah, don't just accept appointments to trust, because like I said, it can be relatives, it can be friends. So sometimes you can just call up somebody and say, I'm creating a trust and I'd like for you to be a trustee. And you just say, yes, that's fine, okay. And then that's it. And like I said, because if the founder is still alive, things are relatively easy because the founder runs everything and sort of has control of everything. But at some point you might find yourself in a situation where you're a trustee and you don't even know what it is you're supposed to do. Yeah. So you do have to be responsible in terms of saying, okay, what is the purpose of the trust? Can I see the trust deed? You are supposed to see the trust deed before you even sign it, because you are supposed to sign to accept the appointment. So you are supposed to read through it. And if you find that it's something that you're not able to do, then you say so at that point. But you will be aware of your obligations before you even, or you should be aware of the obligations before you even sign the deed to accept the appointment.
But okay, we have been talking about family trust here, Shami, and I want to believe there are different types of trusts in this life and in this nation of ours. What types of trusts should be particularly concerned about the recent ZIMRA notice, really? Because I'm finding to say if it's a legacy trust that is just that Glenora house and that's it, and we are actually living in that house, it may not be the one that's really making noise because you just got that one house. It's a family house. Great-grandfather just said, it's my house. Anyone can live in it as long as you are not living with your spouse.
Right.
You see, those are whatever the wish is. But I want to be able to understand, especially with the ZIMRA notice that recently happened. And are we only talking about large commercial trust here, or does this also affect this family trust that holds that one Glenora property of ours?
Right. So when it comes to the tax obligations, all trusts should be concerned.
All of them.
All of them.
Whether it is one home.
Whether it's for one home, whether it has got property or not. Because, you can register a trust and then just hold it before you've acquired property. As long as you have established the trust, then
as long as it's registered.
Yes, your next step should be going into the ZIMRA system and making sure that you register. And like I said, if there's no income, if there's no property, then just do your nil returns and then you're fine. So your level of involvement just changes depending then on the assets that the trust has and the type of activity that the trust has. So when we're registering trusts in Zimbabwe, the registration process itself doesn't necessarily differentiate in terms of this is a commercial trust, so to speak, or this is a family trust. The document is the same. The objectives are what are different, depending on what the founder of the trust wants to do. And sometimes you will find that if your trust is too commercial, the registrar of deeds will actually say, no, then register a company. Because why are you insisting on registering a trust to run commercial activity. So you also have to be careful about the wording and the way that it is done, because again, it becomes an issue of tax evasion, because you want to run your whatever entity, you want to run your business through a trust that no one can really look into. So if it becomes too commercial in nature in the way that the trust is set up or what the founder wants to do, it will raise it may raise flags at the point of registration. But the tax issue applies to all trusts across the board. Your level of involvement is then just dependent on, do you have one property? Do you have 10 properties? By the time you've got 5 properties, absolutely you need an accountant. You need a professional to then manage that aspect, because you also need to then make sure that you are paying the appropriate taxes, because there could be exemptions or other issues in between that you're not aware of, because here we're having a broad discussion in terms of a trust is obligated to pay 25% on undistributed income. But there are nuances to all of those things. So you do need to have a professional that will then come in and assess your records and the way you're operating, and then make sure that you're paying the appropriate taxes at the end of the day. But it applies across the board. Even if there's not a single property in the trust, it needs to be in the system and it needs to have a tax clearance certificate.
There you go, entrepreneurs, you've heard it for yourself. And look, why we have to discuss some of these issues, remember, we are the people in our families. So it's easy for me to be recognized to say, maybe it's Ethel who understands it because I've become entrepreneur in the family and I've just been appointed as a trustee. And I cannot just get in there ignorantly. And even you as an entrepreneur, when you're setting up your trust, you've heard it from Shami, there's nothing like a commercial trust. If it's just a family trust, it is a family trust, but there are proper things that really needs to be done. Shami, what will be your parting words? Would want you an all-night fireside chat with all the entrepreneurs gathering around you, this one shouting and asking, but time does not really permit, and hence why we had to sit in a corner and just be addressing some of these questions. But as they come, I think we are going to involve you and help us in answering them on social media, just giving them the tips. And obviously, like Shami said at the start, she's not representing ZIMRA. She's just a tax advisor who advises to what is legally possible and what is not really possible, and for you to be well governed as an entrepreneur. What are your parting shots to us, Shami?
Right. So please take away this. A trust is an excellent, or can be an excellent vehicle for managing your affairs. It is, I think, is something that people start to think about as they're starting to make a little bit of money, or they are starting to acquire assets. And I absolutely would encourage the viewers, the entrepreneurs, the business owners to look into that. Just make sure that it's set up properly. Just make sure that you get the appropriate advice, because it can also only be done by lawyers that are called notary publics. So make sure that you go to the appropriate persons and make sure that you're getting the advice that you need on the accounting side of it, and making sure that your tax obligations are up to date across the board. It doesn't help you to then have a business running properly, but then your trust gets you into trouble, or vice versa. So make sure that your tax obligations are in order across the board.
Thank you so much. And there, our viewers, entrepreneurs, business owners, Shami is available for us, obviously for a fee if we are now using it to register our trust. But look, she's someone who's come with the information and someone we can trust. So yes, you can get in touch with us if you want to speak to Shami specifically to your situation and get the legal advice that you'd want, or the consultants to make things right. She'll tell you all about it, and even the fee structure. What we can only do as MoneyMart Finance is to negotiate with Shami, say when our entrepreneurs are coming, please consider them. But this is where we are at, and we have come to the end of this show where we have been talking in the last 2 episodes about tax and ZIMRA issues, I'm sure we have tried to capture every question that you guys were having and asking each other and asking even us as your trusted finance partners in the streets. And like we said, yes, we are good as finance partners, but when it comes to other issues where we are not experts, this is where we bring you these experts to explain some of these things so that we continue to help each other in a proper manner and in a compliant manner. Because our goal as MoneyMart, the vision is to grow young businesses into large corporates as we help you in credit facilities, in your investment thoughts as an organization, and making sure that you are acquiring the right assets at the right time for you to continue in a sustainable business. Do not forget to like and comment. Your questions gives us the thrive of what we should discuss about in the next episode, because we really do care what's happening to you as an entrepreneur. What's the hiccup that you're facing where you're saying, can it just not be addressed to us and I make things right as an entrepreneur and make sure that my business goes to the next level? Subscribe to the page and click that reminder button that will tell you that, oh yes, those of my own are gathering again. Until next time, thank you for now. Bye.